Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 20th. Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. I know you're going to love this one. It's my favorite tool. And a tool is this. What we focus on grows. You know, each of us were attracted to TFNN, to Tom O'Brien, because as he says, what we think about, we bring about, and what we focus on grows. Or at least I know that this is one of the many reasons that I was attracted to Tom's infectious energy. You see, when we focus on a particular thought, our mind immediately responds by calling up similar thoughts. You know, positive and loving thoughts, well, they can spark a whole range of thoughts, of feelings, and certainly they can lift our spirits. Just the opposite can be said about negative thoughts. So what we think about, we bring about, and what we focus on does grow. Try it. Try this out. Try this little exercise. What I want you to do right now at this very moment is I want you to think of the color blue. I want you to look around you. I want you to attract everything blue, even if you don't see something blue. What is it that's blue out there that you could see? Think of something blue. Think of many things blue. Attract them in right now. Think of everything that is blue in your life. Some of you probably pictured a blue sky. Maybe it's some blue waters. Maybe some of you are looking out at a lake or an ocean. Some body of water out there you see whatever it is that we choose to focus on, it automatically expands that image for us. So the real question is, do you focus on positive or negative images? Do you want to focus on success or failure? The answer is simple. Fill your mind and control your focus. Fill your mind with images of success. Walk like you would walk if you knew you were successful. Sit right now. Sit like you would sit if you knew that you were successful. Talk like you would talk when it comes to being successful. Trade, folks. Trade the patterns that you see if you know that they are successful. All I can say is thank you, Tom O'Brien, because you are absolutely right. What we think about, we bring about, and what we focus on grows. Let's go check out these markets here right now. We've got Dow futures up 15 points, trading out at 15,017. S&P futures up 2 1/4, trading at 1647. NASDAQ futures up 8 at 37.8. Russell 2000 up about a buck, trading at 10.13. King dollar back 30 ticks, trading at 80.96. The euro is trying to break out. We'll take a look at the euro. Goldilocks not doing much, up 50 cents. Silver down 15 cents. Light sweet crude, that's back 1.5%. That's off $1.61. We'll take a look at that for sure as we take a peek around the globe here right now. It's going to be up to the U.S. It's going to be up to you and me if we're going to go ahead and lift the tide here, because the tide certainly has been going out. I believe that we're going to see a bounce or a pause in the market. Whether that takes place today or tomorrow, we're going to see a bounce. Looks more like today is the day, so it's going to be up to the U.S. to go ahead and the bounce here is most likely setting up the B to C of an A to B equals CD down. Right now, as we take a look over in Europe, they're down about 1%. Over in Germany, off 80 points. The FTSE off 0.5%. That's down 35 points. Over in Asia last night, a little bit of a bloodbath. The Nikkei was down 361 points. Of course, what it actually set up is a buy pattern. So we're going to take a look at that. The Hang Seng off 493, that was down 2%, and the Shanghai off 0.6%, down 14 points, closing out at 21.69. Our call-in number is 877-927-6648. If you give me a call, we can take a look at your stock chart. Let's start off by, let's go take a look at the Queen. Biggest movement out here really in the currency side of life and then the international market. So let's go ahead and we'll start off the day by taking a look at that. We're going to start off taking a look at the Queen, the Euro U.S. dollar. You know, yesterday, what I pointed out to you was if we took a look at that August 15th bar, that little wide-ranging bar that we saw, price moving, two small-bodied candles moving inside of the bar from August the 15th. That was a session on the 16th as well as yesterday on the 19th. And what we saw, what I said, was if we see a close above, now this is just this is a daily chart we're looking at, but if we see a close above 133.61, we'll see a breakout. That is a momentum candle out there. Most candles are reversal signals or just simply a neutral or not really anything at all. But most real candles that you pay attention to are reversal signals. There is a continuation pattern, and this one here is the rising 3 pattern that we're taking a look at. Now, what I also mentioned was, okay, it's going to be a breakout, but it's going to run right into resistance just a bit higher, which was the swing point of June 19th out there. That level, 1.3415. It's trading just above it. So if we do see a close above that consolidate the momentum candle, the rising 3, along with breaking out above the June 19th level, and we'll see the euro get stronger, the U.S. dollar index get weaker out here. Now, if we go from the swing point high inside the euro, that's the February 1st level, that's out at 137. We'll go down to the low that was put in here on April the 4th. You can see right at the 1.3503, that is your 0.786 retracement. That would likely be the target zone where the euro would head to. Not really an A to B equals CD pattern out here. If you were going to come up with one, you'd really have to use both the top and, in my opinion, you'd have to use both the top and the bottom of the July 11th candle, which sometimes you have to do in order to create your A to B equals CD point, as awkward as that might be out here. Well, I grabbed the wrong tool. We could go ahead and do that. But that's the only real A to B equals CD pattern that we would see. And right now, what it's completing is the 1-to-1 A to B equals CD. If we were to go up and see where 1.272 is, it's in the 1.3532 level. So if we see a breakout above a close, which means a close above the session from June 19th, that level again, 1.3415, you will see the euro head to the range of 1.3503 to 1.3532 out there. So the euro attempting to break out. What does that mean for the U.S. dollar index? Well, if we go take a look at the U.S. dollar index, that right now is testing the lows, most recent lows from August the 8th out there. That was 80.89. A break of that area will go ahead and take the U.S. dollar index back most likely to the June 13th level. That's at about $80.50. At least that's the next swing point out there. The U.S. dollar index neither overbought nor oversold, so it does have room to run to the downside. let's go over take a look at what's going on across the globe here. Let's take a look. Let's start off with the Nikkei. The Nikkei last night, as I mentioned, that was down a total of 362 points. That was off 2 6/10%. Now, you're taking a look at, if you're watching us on Tiger TV, you see two different chart patterns on my screen. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can get the live stream of the show by going to the homepage of TFNN.com. On the right-hand side, you'll see that button with 3 smartphones. Click on that. You'll see the streaming live. If you'd like to see these images in HD, just go sign up for the Tiger's Den. You can test drive that for 30 days. Everything is extremely clear out here. What we are looking at is the Nikkei. We're looking at the daily chart. Now, the Nikkei, clearly off of the bottom here that took place on November 13th of 2012 when it was down at 86.19. Actually, you know, and we're going to call that the bottom. If you pull the black line on my chart here, happens to be the U.S. dollar, Japanese yen. In fact, what I'm going to do just to clean this chart up a bit here, let's go ahead and get rid of that overlay, just make it a little bit neater out here. Now, this, no question about it, this has been one nice bull run. Now, what H.M. Gertley did was he gave us a set of tools to be able to buy into a trade that you missed out on, whether it was the trade going north, meaning bullish, or was a trade going south, bearish. And what he said and what he created was, in this case here, in this bull market, you would want to, and that's most certainly what the Nikkei has been in. If we take a look at the daily chart out here, you would want to buy the first Gertley buy pattern that's out there. Well, folks, that buy pattern actually completed last night with that move down. Now, that doesn't mean just jump on board, because that's the smaller pattern. There's a larger pattern that's out there that's in play, and until we actually see the bulls show up, we won't know whether it's the smaller pattern, which is this light blue pattern out here, because you can see coming off of the lows here, there's been no A to B equals CD down, and that's what is required inside of a Gertley buy or a Gertley sell pattern. Now, what we have here that's going on inside the market, specifically inside the Nikkei here, is we have a potential larger A to B equals CD down. That's the one that started on May 24th out. May 20th, was it May? Let me get the right date out here. That was on May 23rd out there after our May 22nd key reversal session out here. The Nikkei did the same thing. So it's possible that A to B equals CD leg would actually set up down around the 11,670 area. Quite a bit of difference from where we're at right now, which is 13,396. Nonetheless, we have a 0.618 Gertley buy pattern that did in fact complete and set up last night. You have a nice 1.272 expansion of the swing point from July 30th, that low out there, 13,614, up to the high that was put in on August the 2nd. But that was a candle that closed at its session lows out there, so you can't just jump in and buy this, because if this area here fails, well, number one, it would set up the 0.786 level. That and that would also be a Gertley buy. You see, we know what the pattern it is that we're searching for. The key is to just simply have patience and wait, because this pattern would also complete at 12,958. And if that one fails, that's what will set up the larger Gertley buy. But what I do know about last night is the Nikkei actually set up the first Gertley buy pattern off of this bull leg up. We'll see whether or not the bulls actually run in and give us confirmation. We'll know about that maybe by about 1 o'clock in the morning or so. 877-927-6648. Be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Let's continue over in Europe here. We're taking a look at the FTSE. Right now, the FTSE here has completed the 1 to 1.272 A to B equals CD down. That price target was 63.85. Actually got down intra-session here to a low of 63.98. So close enough for me to have completed that pattern. No bullish candle or anything like that, but it has completed the 1 to 1.272 A to B equals CD down. If we take a look at what's going on over in Germany here right now, gapping down this morning, trading sideways, but it has been trading sideways really in this consolidation zone for the last month or more, since July the 15th out here. So it does have that 0.786 Gartley sell pattern, but just simply sideways move out of here inside the DAX. So no real big breakdown there. Now let's switch over to the U.S. markets. Let's go take a look at our daily futures contracts here and see what it is that we'll be watching here during the day. So let's start off with the NQ. Let's start off with, what basically has been the strength. You've got the NASDAQ futures now, but the NASDAQ futures have not done to give us any kind of indication as to what they want to do next is test the May 22nd high out there. That number is 30.53. So far, the low that we saw that came in was really intra-session yesterday when they pushed down to 30.60 level. Now, what we can also see is that trend line that's out here. That's that trend line coming off of the November 16th low. The next touch point is your December 31st level out there. Right now, price just traveling around, in that trend line area. It has not been broken. It's been broken a couple different times up and down, but right now, price traveling around that area. As you can see, you've got both diagonal support as well as horizontal support. The horizontal support really being that May 22nd high, unless there is a close below that level, which would put it into the lower part of the range out here. But right now, what we have seen is we've seen three very small-bodied candles. So what does that mean to you? What does that mean to me? It means it's losing energy on the way down. The conviction, we saw that conviction, no question about it, on August the 15th. Wide-ranging bar markets do not end on a bar like that in essence closes at its session lows out here. One could argue, well, closed at the session low on August the 16th on Friday. Yeah, but you've got to really take into consideration the body out here. The body is truly the essence of price, and therefore this is just simply telling us that the market is actually tired as it is moving down. If we go take a look at, that's on the NASDAQ, we go take a look at the Russell 2000 futures out here, with the Russell 2000, which has been strong. What this has done is this has rejected the May 22nd level. It has actually tested that high, which was 1,008.40. So far, intraday today, it has been down to 1,008.20. It has rejected that area. So we want to be paying attention to both the NASDAQ and the Russell 2000 futures to get us some type of indication. Now, if the Russell 2000 were to close today above 1024.10, it's at 1013 right now, that will absolutely guarantee us that we've got at least a bounce that is underway. And that bounce would go ahead and take the Russell futures up to the 1041 level. So that is if you get a close today above 1024.10. If you're short, and now again, short term, meaning that right now, if you take a look at the New York Stock Exchange, the bears absolutely have control. They've had it now for the past almost 2.5 weeks or so. There's not a chance that the bulls can take charge. What I mean by that is they would need net advancing issues today of 5,285. That's not going to take place. So what we're looking at here, setting up, whether it's today or tomorrow, is we're looking for that B to a C of the A to B equals CD down in the marketplace. We'll take a look at the indexes. We'll certainly do that during the next hour. But let's go back and now let's take a look at what's going on inside both the Dow and the ES Mini. If we take a look at the Dow, we're looking at the daily chart out here. You'll see those same candles, same small-bodied candles that really we were looking at inside the NASDAQ futures. So today, if we take a look at in fact the Dow futures close above 15,040, you'll have basically a bull sash type candle out there. That'll be a reversal signal. And in essence, the Dow has made the 0.618 retracement. The Dow futures haven't gotten down to the exact level, be 14,904. So there's a little bit more movement to the downside. Maybe we see a spike down here today that touches that level. That's a normal move, right? The 0.618 retracement level. The high so far has been 14,959 versus 14,904. So potentially another 50 points down. We'll see, whether that unfolds. And it's going to be important because any rallies that have been out there, we have seen selling. So we saw the market rallying into about the 8:30 time frame or so inside the market. We're seeing a little bit of a sell-off now. So the futures are basically flat out here. But it's very easy for us to identify what it is that we need to be paying attention to. Inside the ES Mini, it becomes real simple. The ES Mini today, that closes above 1657. That'll tell us that there is most certainly a bounce underway. 877-927-6648. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 6 points. Well, not exactly out of the gate here. It's trading out at 15,017. The S&P is up 2 at 1647. Composite up 7 at 3596. Russell 2000 up 2 points at 1015. Google up $1.11. Apple up 26 pennies right now. Microsoft up a nickel. Intel up a nickel as well. Lead the charge, the upside, it's Netflix up 477. Tesla Motor just behind them up $4 and a little bit of change. Urban Outfitters, URBN, up $369. Best Buy up $3 and change. TJX Companies up $270. Net Lease Inc. up $2. Ross Stores up about $2. To the downside, you've got Lightbox Holdings getting whacked off 38% this morning. That's down $7 and change. Zillow off another 5% here this morning. They're down $4. Dick's Sporting Goods up 5%, down $270. Barnes & Noble off about 11% this morning, down $2. Stealth Gas off 17%. GASS is the ticker symbol. That's down $1.64. Medtronic off $1.52. Let's go take a look at some of these stocks here. Popping and dropping. Let's go see what they are trading into. We'll start off with Urban Outfitters. I don't know if Urban Outfitters was out with numbers. I believe they were, and they generated net sales of $758 million versus $676. So a nice top line beat out there. If they let me see if I can find the net income, $76 million versus $61. Gapping up this morning, has some good volume behind it. It's running right into a resistance area. That resistance area set up by the bearish engulfing and gap down that was formed out here on the 5th of August. That level, as far as volume, the actual gap down volume, the breakdown session, 2.5 million shares. So far in trading this morning, already 1.2 million shares. It should be able to break above this level, that meaning that it wants to go ahead and at least test the swing point high out here on May 20th, and that only has 2.7 million shares. The bottom of that swing point is 44.21. You can expect Urban Outfitters to at least go test the 44.96 area. So this gap down here, just simply coming into it with too much volume here thus far. Nice big wide price spread and big gap out here inside Urban Outfitters. And Urban Outfitters, not too shabby of a looking stock chart. A real big breakout session occurred here August 21st, 2012. So if you go back a year ago, you talk about wide price spread. It did about 22 million shares on that trading session. The entire gap has not been filled. The lowest low that has occurred so far came on November 16th of 2012 when it got down to 34.38. So not looking too bad, at least on the daily chart for Urban Outfitters. Let me see if I pull this back even further. What is this going on? So it's trying to break out, period, trying to break out to new all-time highs. It'll go test that 44.96 level, or it should go test 44.96, the high there in May. That was on Urban Outfitters. Ticker symbol there is URBN. Let's go check out Best Buy. BBY, I believe, is the ticker symbol out there. So let's go see what Best Buy is doing here this morning. That has gapped up as well. That is trading out right now at 33.83. So let's pull this back. Volume behind the move, not too shabby as well. Already 6 million shares. It made a high recently with 7 million shares. That was on August the 14th. So we're going to need to pull this one back even further to get some type of feel. We're going to put this on a weekly chart just so we can fit this on the screen and see if we can find out what this is trading into. So take a look at this thing off of the bottom out here back in December 28, 2012 was $11.20. It's now at $33 and change. Let me just clean this entire slate off here as we take a look at it. There we go. So as we take a look here at Best Buy, what it is trading into is where it really broke down, which will take you back to December 17th, the week of December 17th, 2010. Now, you talk about wide price spread and accelerated volume, 123 million shares. That price spread was from 34.25 up to 42.57, so it's trading right into that supply line. So for all those folks that held on to the stock since December of 2010, they will gladly go ahead and exchange their shares for cash today and get out of this thing, because those folks that are still in it also wrote it down to $11 out there. So it's running into quite a supply line. Again, the bottom of that is 34.25. That has been tested here today. We'll see if it can close inside there. If it can close inside there, that would set up a potential run to the top of that bar, which is 42.57. But big supply line inside Best Buy. Let's see, we've got Home Depot. Let's go see what's going on inside Home Depot HD. Well, I've got that, I think, already on my screen out here. Give me a moment to pull that one up. Home Depot was out with numbers. Let me see what their numbers actually were out here. They beat their both their guidance. They beat their revenue number. Net income was $3 billion versus $2.5, and net sales $41 billion versus $38. So let's go take a look at Home Depot, see what it is doing here this morning. Home Depot actually trading off. So it's been selling off of the session here. It gapped up, or it opened. This thing broke down, so it's kind of interesting. This thing actually broke down with the market on August the 15th. So this is a tell. So it broke down with the markets on the 15th, and the volume behind that move was 13 million shares. Now, the bottom of that candle, which was August 14th, that price level was 77.18. It's gotten up into it this morning as it got up to a high of 77.25. Good volume behind the move already, 2.4 million shares. And when it moved down, was with 13 million shares for an entire trading session on August the 15th. So it'll be interesting to see how this trades. If, in fact, you get a close today above that gap, meaning 76.60, that's the high of August 15th, and that would actually kind of suggest that it wants to run higher. Now, if we take a look at the most recent swing point, which would be June 24th, it has not made it down into that level. As far as volume there, 10 million shares, the top of that is 74.02, so based on the way it's trading right now, it wants to actually run down and test that area, and it does have volume today, 2.5 million shares already. That is on Home Depot, but boy, what a good-looking stock chart. You'd like to see this thing come back and maybe test that 200-period exponential moving average. That's that green squiggly line that you see on my chart out here. That price level, by the way, is about $71.17, and that is on Home Depot. You had J.C. Penney also out with numbers. Their ticker symbol is JCP. Let's go see how that stock is trading today. See what it is doing. It gapped up a little bit of a sell-off, but if we pull this thing back here, J.C. Penney's got this high volume low out here. You'd like to really see this thing be tested, and most likely it will be tested, and that's a price level of $12.34. That was with 64 million shares on August the 9th. The low of that candle has not been tested yet. I suspect that it will. This thing has got some resistance here. This downdraft session that it's trading into takes you back to April 9th, 2013, 89 million shares. So it's got quite a few supply lines out here, and it'll have some struggles as it tries to get into the resistance zone. Let's go take a look at the metals, see what we have going on inside the both the metals and light sweet crude. Let's start off with Goldilocks here. So we take a look at gold. It's trading out at $13.70. That puts gold up about $5 and right around $5 right now. Gold here not really backing off a tremendous amount. It has a confirmed A to B equals CD up. That should take it to the 1440-ish level. I would think that what it would do is try to make a run for that 200-period exponential moving average, a daily. That would be 1463. So 1440 to 1463 looks to me like where gold wants to head to. Just took a little bit of a rest the last couple of days by trading sideways out there. Let's go take a look at silver, high-ho silver. Now, silver stronger than gold out there. Silver, if you take a look at, silver was pushed lower this morning, I should say, earlier this morning when it got down to a price here of $22.28 out there. But, boy, take a look at bullish configuration. Now, what silver did was it made a 1 to 1.6, made very close to the 1 to 2 A to B equals CD. The actual number would have been $23.89. It got up yesterday to a high of $23.60. So in one sense you could say, yeah, it made that number out here. But when you take a look, remember we took a look at the euro earlier, and you have these wide-ranging bars. Now, in the case of the euro, you had price actually traveling with inside the bar here. In this case, it's a little bit different because of the last two sessions, these small bodies. It really hasn't traveled with inside the body of the session from August 15th, but it just simply has been trading a bit higher. So, it looks like silver wants to make, in my opinion, silver wants to make a run up to that 200-period exponential moving average, maybe make the 1 to 2.618 A to B equals CD. And part of that reasoning is just simply the explosiveness off of the C point of this A to B equals CD up. So it doesn't look like silver here wants to reverse just yet, but man, oh man, it is truly in a overbought condition. But in bull markets, things can stay in overbought for a longer period of time. If we take a look at light sweet crude out here, light sweet crude backing off, but even though it's backing off, it's still traveling in this yellow box. This yellow box is the sideways consolidation that it has been in really ever since the July 5th time frame. So it looks to me like, and we measured that yesterday, the bottom of this consolidation basically 102 and a bit of change, and the top is 109 and change. So we're going to call it a 7-point consolidation. 7 points. If it breaks out above the 109 area, that gives you 116. Well, we're looking for a 114 because of the 14-point consolidation. Likewise, if it does break to the downside, meaning below 102, that would set up a move down to, what would that be, $95. And $95, that would be a nice thing out there because that would bring it right back to the top of that consolidation level, which is really what we're watching for, because when something breaks a consolidation, you like to see it come back and test it and reject it. If it rejects it, that tells you that the consolidation move is more likely to occur. And if a rejection gets back inside it, that says it'll go down to the bottom, just like in the case of ExxonMobil. In fact, if we go take a look at ExxonMobil, we should do that. Then I'll switch back. We'll take a look at bonds, see what bonds are doing. But here's a perfect example of when you break a consolidation level and you get back inside it, you got to be careful because it signals a run to the lower part of that consolidation. In the case of ExxonMobil, it's a nice 7-point consolidation range, the bottom of which is $85. Yesterday's move down was with 11.7 million shares. The swing point low that it's going to travel into has got 17 million shares from April the 17th. So the nice thing is that this is coming down with lighter volume into a consolidation range. So ExxonMobil becomes a really nice buy right now as we speak at that $85 area, assuming that it holds that consolidation range, because what does that set up? That sets up another run for the highs at $93 out there. So that is on ExxonMobil. That is on your consolidation candles out there. Let's go speaking of consolidations, let's go look at Big Blue out here. I did mention earlier in the show to think of something blue. Maybe somebody out there actually thought about IBM. Big Blue out there. So as we take a look at Big Blue, it's actually been singing the blues out here, but it's now headed down to the bottom of its consolidation that has been going on since January of 2012 out here. So a nice long-term consolidation. Looks like it's going to finally test that area being the price level of 182.30-ish or so. We've seen, and that breakout there inside IBM was with a total of 13 million shares, 12.8 to be exact. So if it can pull back, and it can pull back on lighter volume, hold that consolidation, that would be nice and bullish. Yesterday's move back, 3.2 million shares. Now, that's the original breakout that we were looking at inside of IBM. What we really want to monitor it against is the last swing point low out here, and that's from July 12th, and that had 4.9 million shares. So you got 4.9 million shares July 12th. The high of that was 184.39. You're trading into that right now. The low is 181.85, and yesterday's move down into it was with 3.2 million shares. So 3.2 coming into 4.9. So long as today it does not bust from a volume standpoint more than 4.9 million shares, a test, and the ultimate would be, in this case here, a test of 181.85. That's the low of July 12th, and then a close back above the 182 level inside that consolidation. Do it on less than 4.9 million shares, and that would set up a bounce inside the Dow out there. So, I did say that, I suspect we're going to see a bounce, whether it's today or it's tomorrow. We are coming into a full moon. Ephemeris time, it is tomorrow, but officially New York, or Eastern Standard Time, I should say, comes in at about 9:46 or so this evening. And full moons typically have energy to the upside. And what I mean by that is if we go and take a look at my one of my lunar charts out here, we take a look at the full moon cycles. Now, not that this is necessarily going to mark a big turn, but we still need to be paying attention to it. If you take a look at the full moons out here, and the reason is we take a look at this lunar chart here. This goes back here quite a ways. What I'm showing you on my screen here right now really just takes us back into that November 16th time frame, and so. As the market moved down in the last full moon, that was in the June 23rd out there, and we made a low on June 24th. The one before that, market wasn't making a low, but just simply had that momentum moving forward out here. So I don't really use these as turn dates out here. There's other reasons why I believe that the market is set for a bounce or a pause at a minimum. But the prior full, and if we take a look at the full moons to the upside here inside the that did act as reversals as the market was moving up. You do have the May 25th time frame. May 25th, the market, well, we had, you got to kind of give it a little bit of leeway here. It was May 22nd when we actually saw the high in the marketplace. But if you take a look at, for example, July 22nd out here inside the market, the market was moving up into that full moon, and all we really saw was just a sideways move until that high was taken out on August the 1st. 877-927-6648. Basically, that means don't pay too much attention to those full moons. Be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Right now, a flat market. The Dow is down 2 pennies. The S&P is up $1.57. Nasdaq up 10. Russell 2000 up 3. So you got the Russell 2000, Nasdaq 100 leading the charge to the upside out there. The New York Stock Exchange totally flat as well. Let's take a look here at bonds. We've got bonds trading out at 131.04. Now, what we can say about bonds is they clearly are oversold. So we see a little bit of a bullish looking candle today. So bonds are oversold. There's no question that we could see a bounce occur from this level every time that bonds get into this oversold territory. I'll go ahead and explode this chart up. We're just simply utilizing that relative strength indicator, or relative weakness indicator as well. So if we take a look at bonds, you can see getting into that oversold condition here yesterday, getting to a 30.23 level of the relative strength. And again, last time that bonds were down there was on August the 1st. What we saw was just a little bit of a bounce. In fact, that bounce took it right into the resistance area of the larger consolidation pattern that is out there. So bonds have set up a consolidate. Bonds have been consolidating, taking you all the way back to August in 2011. So for 2 solid years, what we have seen is a consolidation of the 30-year Treasury, and we have seen now a break of that, and we've seen a couple of retests. In fact, the third retest was when we saw bonds move off of that oversold condition, and all that they did was they moved up on August the 12th, and they tested that area, and they rejected it, and that sets up the potential here for a huge move down in bonds out here. That move down takes you into the 116 level out here, but nonetheless, it is oversold. That condition needs to be worked up. In fact, if you go back here to July 5th, you had bonds moving down into an oversold level, and of course what they did was they moved up and tried to get into that consolidation area. They were met there with a bunch of sellers out there, and that just simply pushed price lower. So expect bonds to bounce here, regardless of what our markets do. My expectation is that this oversold condition needs to work itself off, so that says a bounce higher or a move sideways out there. And that's what the pattern presently looks like inside the 30-year Treasury. Inside natural gas here right now, again, well off of the lows out here. Thank goodness for that 1 to 2 A to B equals CD pattern that it had formed out here. You know, if you've got the art of timing the trade, you know when a market does a 1 to 2 A to B equals CD, it's going to do something else. Well, in this case here, that something else was off of the bottom. And off of the bottom because you had a nice key reversal session, bullish engulfing on August the 8th. Of course, that also moving from an oversold condition. So we'll see, you know, it needs more conviction, needs more volume behind the move. But at this stage, if we take a look at just coming from the most recent swing point high to that low on that key reversal session, you can see you're up above the 0.382 level. That says 356 is on the horizon out here. And what's nice, we haven't seen any bearish candles on that move up. That is in natural gas. So that looks pretty good out here. So what do we expect today? What we expect today here is either going to be today or tomorrow. We're going to see a bounce in this marketplace out here. So it's going to be all about the U.S. Now, that bounce could be nothing more than just a pause. So it could be a pause to just simply work off some of the oversold condition. In fact, if we go take a look at the ETF structure, do this real quickly before we go to break, and then we'll spend time during the next show. But if we take a look at the diamonds, which have been the weak link out here, you can see that the diamonds have moved into that oversold condition. Now, in a bearish market, things can stay more oversold for longer than you want. But nonetheless, what the diamonds have done is they've made that 0.618 retracement by getting down close to 149.40. Actually got down to 149.56 here this morning. Folks, it is Terrific Tuesday. If you're off to start your day, have an incredible day. I look forward to seeing you in the morning. And always remember this, you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday.
Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.